Welcome back to We Here Now. I'm X. Let's get to it. So, first things first, this is not financial advice. This is just how I make my money. So, I want to apologize. I took some time off. I had a birthday, and I just wanted some time, some time off, some time off. So, why most traders fail and how to avoid it. So most traders don't fail because the market is hard. They fail because of their behavior, overtrading, oversizing, and no rules. And the worst part, they don't even realize they're doing it. In this lesson, I'm going to show you exactly why most traders fail and how you avoid becoming one of them. So, trading is not random. There are patterns to failure. If you understand them early, you skip years of pain. In other words, lost money. So overtrading. Overtrading is when you take trades that don't meet your system. Why it happens? Boredom, impatience, and chasing action. What it leads to: low quality setups, emotional decisions, and fast losses. Professionals don't trade more, they trade less but better. Oversizing. This is the account killer. This goes back to risk management. So, oversizing means risking too much on one trade. So, when you lose, you feel it emotionally, you panic, and you break your rules. One oversized trade can erase weeks or months of progress. No rules. This is the biggest one. Most traders don't actually have a system. They enter randomly, they move stop losses, and they change strategy mid trade. That's not trading, that's reacting. And reaction leads to inconsistency. The fix: structure and discipline. So, to avoid failure, only trade your system. Risk a fixed amount, accept that losses are part of the game. You don't need more trades, you need better control. So, if you feel bored, don't trade. If a setup doesn't meet your rules, skip it. If you want to increase size, don't. Don't increase size unless you you have a good risk management system, which I can show you guys that as well. So, if you break a rule, stop trading for the day. So, if you can eliminate these three mistakes, you're already ahead of most traders. Next, we're going to build skill the right way without risking real money. All right, let me pull up the my risk management sheet that I made and that I have been sticking to, and it's been a game changer. Now, if you guys want this same sheet, I can make it available to all. So here is my risk management sheet. Of course, small accounts, you want to trade a little heavy. So, for instance, if you have a $500 account, that single entry will be $1.50, meaning your stop loss will be $1.50. I repeat, $1.50. That means that you will be able to lose over 300, 400 trades. I'm not saying that that's the plan because we are here to make money. I'm just saying this is what you call good risk management. And that's actually 0.3%. A lot of people like to risk 1% of the total of their total account. I believe that's just too risky. So we got 500, we got 1,000, two. Basically, I doubled it each time. So at 1,000, you'd be risking $3, 2,000, $5, different percentage. 4,000, $10. Now I moved the percentage over here to 1.75, and then boom, we got all this right here. And then once I get to 128,000, now I come over here. So at 128,000, I'm risking 128. And then once you get to 1,000,000, now you are risking 0.035%, which is $358. $358. That's nothing compared to 1,000,000. And then up to 2,500,000. I mean, you just can't beat this risk management. All right, so you've been watching We Here Now. I'm X, and on this next video, we got two more videos, and then we're done. Then we're going to start getting into the good stuff. So until then, I'm X. I'll see you guys on the next one. Peace.